Warren Buffett says it's likely for the first time in Berkshire's history over a 5-year period that book value will not rise faster than the S&P 500.
Yeah.
What are your thoughts on that?
Well, it's obviously
why?
It's a sign of the times, right? I mean, it speaks a lot to Berkshire's size and their ability to keep growing at high rates. And this is a bear point that's been thrown around a lot, as it should be. I mean, it's the 5th biggest company in the stock market today, and obviously you're running into some natural size constraints when you get that big. Now, size is also an advantage for an insurance company, and I think they're going to play that pretty well, and they have, but it's definitely constrained. In fairness to Berkshire, it's a pretty tough comp of the S&P bouncing out of the financial crisis. So it's not quite like they haven't had a good run. I think you'll see that number eventually turn, but it does speak to, you're going to have lower expectations for the returns you get on Berkshire going forward. That said, if you're buying it where it is today, around like 1.4, or you buy a little bit cheaper, I honestly think you can get up a little bit cheaper. 1.4 times book, you're going to do pretty well. That's not a very commanding price, especially for a business that is compounded at 20%, its book value 20% annually for about 46 years. They're not going to do anywhere near that going forward. I think something like 11, 12% is more likely, but that's a very low risk 11 or 12%. And Berkshire is one of the few companies I know of that in the event of total financial calamity would come out better for it, because they have so much cash they can put to work that Buffett would do, and they would come out on the other side a much stronger business. So it's definitely one of the best risk-adjusted stocks that you could find out there.